everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. So you want to protect yourself on the downside in one way or another to limit your risk potential. And we'll go over some ideas in that regard if we find some time to simulate some trades with the charts that we look at. Also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from one location, but with the advanced tools that are offered within both our app and our web trader, like the free signals, the market news, the trade calculation features within the order window, which is nice for helping with the risk management, and some other tools as well that we use from time to time. And so we can log in here in the upper right corner to be in the web trader platform. What we should do first, probably even though our focus is technical analysis, is to talk a little bit about what's happening fundamentally right now, because it definitely plays a role with how you then interpret the technical movements on the chart and the directionality maybe that you might prefer. The big news really today was out of the US. The inflationary data, specifically the CPI data, came in way hotter than expected, way higher than expected. And so these numbers showing that the US maybe is nowhere near being able to start lowering interest rates further, as the Trump administration would like to see done. It's always good to have lower interest rates if you don't have inflationary problems. But right now, the outlook of how rapidly the interest rates could be brought down to make the cost of doing business cheaper, buying houses cheaper, buying cars cheaper with all the loans that are needed when folks are buying these things. It's nice to have lower interest rates, but the high inflation today has spooked the market, specifically the US market, and other areas around the globe have also caught on to that fear. And we saw a number of equities drop sharply, major indices around the world. And so that's the environment that we're looking at right now, is kind of a fear environment about higher than expected inflation in the US and what effect that could have on global markets as well. And so the outlook of any near-term rate cuts in the US just got crushed, I think. Anyone who is anticipating a potential rate cut anytime soon, I think that's hurt those thought patterns. Now, as we go in then to look at some charts, we keep that in mind. Gold being an inflationary safe haven many times, it's no surprise that maybe it's looking to try and become bullish at this point. If we take a look at the signal on gold, it's a buy signal, and it is darn near the take profit zone. So no surprise with the fundamental news going in the direction of the technical signal, that then the technical signal is maybe more easily reaching the take profit zone. And this is just an example of combining the technical analysis. There was a nice support level. The signal said buy off of that support level and maybe take profit as it reaches the next resistance levels, which is up near the all-time highs for gold. And lo and behold, there it goes, almost towards the all-time high once again, looking to break 2,900 plus and head towards, according to this signal, 2923 before it may slow down. Okay, so that's the technical signal. The fundamental news may seem to feel that it's in that direction. If gold is a safe haven when there's fears of inflation, and so if you were going to trade on this signal, well, you're a bit late. Okay, the short-term signal already almost to the take profit zone, the beginning of it. But if you're looking longer term and just feeling like, hey, I think there's reason for fear on the markets, and that could push gold up at least towards the all-time high without having to break the all-time high. So that would be up in this direction here around 2940 or so. And so if that's the route that you want to take, and you see that it's reached a resistance level, which is where the take profit zone is, right? That's why it says take profit here. You see as you come across, there's the resistance. If it breaks this resistance level here, then it looks like maybe clear sailing, technically speaking, on the 1 hour candles up to 29.40. Okay, so there are a couple different ways you could go about this. You could say if this pulls back, I'm not in, but if it breaks the resistance, which would be, let's say here, 29.12 would break this resistance and this here, would be above all of this resistance, then maybe if it hits 29.1250, you have a buy to 29.40 with your stop loss back below this resistance level. Okay, and if that was the way you wanted to go about it, saying, okay, the short-term signal is kind of showing itself to be a decent signal with the buy, but you're a little late if that's the take profit zone you were going to go with. So now we start to look, if it continues and shows itself as an uptrend and reaches 29.12 or 29.12 and a half, then we could say execute when price hits. And those of you that got in on that signal earlier, then great, you're already near your take profit mark and maybe you're already closing the position on the short-term move. Little longer-term move, we're looking, if it does break the resistance here, establishing an uptrend, then at 29.1250, if you deem that that means the uptrend is continuing, then maybe that's when you'd want to buy with a further move. In that case, stop loss might be back below that broken resistance, somewhere near where the price is right now, like 29.03. So, and if we want to go a clean $10 down, let's say, so 29.0250. Okay, so $10 stop loss, or I'm sorry, that's the take profit. Let's put 29.40. That's what we have up here. Okay, near the all-time high without having to break it, 29.40 for the take profit, if we can get it typed properly without the extra zeros. There we are, 29.40 for the take profit just before the all-time high. And my stop loss, now we're in the right place for stop loss, $10 down from the entry price of 29.1250, so 29.0250. Okay, now we see potential profit better than 2 to 1, okay, like 2.5 to 1 approximately. And now I can say, okay, maybe I don't want to risk 3,000. Maybe I want to risk 500 or whatever the amount may be. Maybe a certain percent of your balance, which for me, 1% would be like 564. You know, you could risk 0.5%, 1%, 2%, whatever that is for you that you're comfortable with. Now you have your technical setup with where you'd enter, where you'd exit, based on the resistance level. And if it breaks through, you enter, stop loss back below that broken level, take profit before the all-time high. So the technicals are set up with where you'd enter and exit. So now I need to adjust the trade size for the amount of risk that I'm comfortable with. So maybe I go to half a lot, 0.5. And now I can take a look and say, okay, I'm risking 500 to make over 1,300. It's less than 1% of my balance to try and make more than 2%, going towards 2.5%. And so if I'm comfortable with that, then I click buy. Okay, now what we'll see is that's not an open position because it's a pending order. So I'm looking here at orders, and we'll see this will open if it reaches the trigger price. I know what I'm risking. It's a small percent of my overall balance. I know the potential profit is much nicer if it makes it there. And this is based on two things in terms of directionality. The technical analysis signal saying buy, actually three things. The technical signal saying buy from Trading Central, but also our own resistance level and waiting for a breakthrough to establish a further uptrend. So another technical aspect to the move. And then the directionality we hope is backed by all the fear of the high inflation in the US that gold may push up as an inflationary safe haven. So it's always nice to try and back your technical moves with what you hope to be wind blowing at your back on the trade to help the trade more easily come to fruition. Okay, so it's an example of one move we could do. What else? So if we're looking at something like the US indices, we could look at any number of them, but let's look at the US 30 perhaps. So when we look at the US 30, we see the initial reaction, and you'll see a similar reaction on all of the US indices and others around the world, but a stronger reaction on the US indices. What we saw was an initial sell-off when the inflationary data was so much higher than expected. Then we see a pullback, which is typical after such a rapid drop. We see a pullback. Now we feel that we've reached some resistance. Okay, this area is an area of resistance. And so we see here, in the past, this was resistance, resistance, resistance. It went above it, came back and triggered around, up and down around this price, finding resistance again at that price before breaking above with a breakthrough candle, and then it acted as support. So this seems to be an important price level where there's a lot of resistance and then support at that level. And then after the breakthrough, we see this come back up, and right at that price level, it's respecting it as resistance again. Now, technically, this is an opportunistic entry point to short. If you feel this resistance level is going to hold, then you can get your stop loss here, not far up, and your take profit without even breaking today's low is much better take profit than risk. So take profit on a short could be down around 44.2 because it was just there a little bit ago, 44.2. Stop loss could be above this little resistance level here, so 44.555. All right, potential profit like 4 times more than the risk, or 3.5, 4 times more. We're in the direction of the fundamental news, that is fear and the equities selling off. Technically speaking, it's opportunistic because we've got our stop loss a short distance away, just above a nice resistance level from the past, and a better ratio of potential profit compared to risk. Okay, so this is a spot where now we just need to adjust the trade size to be the level of risk that you're comfortable with. Okay, if you agree on the technical setup that we're just below a resistance level, which you see here, and that maybe fundamentally we're in the proper direction where there's fear and the equities are trying to sell off after this inflationary data came in, and maybe you think this is an opportunistic climb if you think that this could have a further drop. And we see it's still trying to test this resistance, test the resistance. And so your entry point just got a little more opportunistic if you feel it's just testing the resistance and might come back down. Okay, and so maybe we'll sit and watch this and see if it breaks above and then right away pulls back down, which could happen as we're watching, and it is definitely testing the resistance level. We'll see if it breaks it as we watch it live. And if we go to smaller candles, we can really see this resistance here, okay? All these 30-minute candles here, testing, testing, testing. It's the same thing here. So do we get a breakthrough candle and it becomes support, or does it test and eventually pull back down? Okay, and so the risk just got less without even minimizing the trade size. Now we're looking at over 6,000 profit with risking under 500. Okay, and so with that type of setup, it could be easy to go ahead and make that move. Okay, so now the position's open, stop loss is up just a little ways, and we'll see if this comes to fruition or not. It's a pretty tight stop loss, so it could get hit, but it's a minimal risk on this type of move. Okay, now what else can we look at? We can look at something like crude oil. Could be bullish with the inflationary numbers being high. The price eventually could try and climb. The initial reaction of fear certainly has pulled it down. And so we can take a look if maybe you could find an opportunistic spot for this type of trade as well. Remember, we've got one pending order if we get the price we want. We've got one that we took a minimal risk for a much larger potential profit that easily could hit the stop loss. But with the entry price we got, it was a small fraction of 1% risk on the account to go after much more potential profit. And then crude oil pulling down during fears of inflation. So usually when there's fears of inflation, prices go up. And so kind of a mixed movement here. And we could then take a look at the larger picture with crude oil and see if there's something that might interest you on a longer term type move. We see crude oil dropping for the past few weeks and some support levels here that we've looked at in the past. And so on the 1-day candles, the current price is sitting right on a support level. So this was resistance, 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 resistance again here, and then a technical breakthrough, and we see the 1-day candles then sat on top of it for a couple days as support. So we see this is an important price level here, where in the past it was resistance, broke through and became support, and it was support again here, tested and stayed above, and then it's kind of wiggled below, back above. Now testing it and maybe trying to drop below again. And so if you're looking at a longer term type move here, this is established already that it can break this support level like here, but then found support again at the next support level down, which was here. 1-day candle sat here for a few days without breaking and went up. And so here we broke this first support level, and the 1-day candles sat here again for a few days and went up again. So if you were taking a shot that maybe it won't break this support level, because maybe you think the inflationary fears could drive crude oil prices actually back up right now. And if that's the case, and you think this is a reaction that could reverse itself, then you have one support level here and another support level here that could be on your side for a longer term type move, with recognizing that it easily could break the first support level, but maybe the second support level holds for you. And so if you're looking that prices could come back up towards these resistance levels up here, okay, resistance, 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 and down, then your potential profit is greater than the risk, even if you get below both of these support levels with your stop loss. Okay, so this is a longer term move because we're looking at 1-day candles, but it looks like if indeed inflation is still strong, that maybe there's reason crude oil price could go up. Okay, and so if that's the case, and that's how you felt about it, technically speaking, you've got two support levels in your favor that you could get your stop loss below and still go after a larger potential profit than you're risking. And if you deem that the fundamentals are on your side, then technically and fundamentally, it could be a move you would agree with to go long here, for example. Now, if you don't agree with the fundamentals behind it, then maybe you don't make such a move. So what we're looking at with this setup, we can risk manage it very easily, take profit up around 74.88 without having to break that resistance up there. Stop loss down below the two support levels, so just below 70, let's say, 69.90. It would take some momentum to drop below 70. So 69.90. And we're looking at almost 2-to-1 potential profit compared to risk. Now all we need to do is adjust the trade size to be an amount of risk that's appropriate for your tolerance level. So 0.5 is a little more than 1% of my balance. 0.4, getting closer. 0.35 puts me at pretty close to 1%. 0.32, and that's pretty much where I need to be about 1% risk of my account. Again, you can risk the percentage that makes sense to you or the dollar amount that makes sense to you. Going after almost double the profit here compared to the risk in the direction that maybe eventually the fundamental news could move this. We'll see if this initial strengthening of the US dollar reverses with these inflationary fears. See, the US dollar is a safe haven many times. As stocks are selling off, especially in the US, they're buying into the US dollar automatically. And so you can see an initial strengthening of the US dollar, even during times where it's inflationary fears, which could lead to potential eventual weakening of the US dollar. But we'll see. You can play head games with yourself with the fundamentals many times, and this is where you back yourself up with the technical analysis as well. If the fundamentals are kind of 50-50 in your mind, you can still use the technicals to help you determine your directionality as well. And so in this case, we see a nice support level that it's literally balancing on top of with the 1 hour candles. And when we go to the 1 day candles, we see that double support level that we already outlined on the 1 day candle chart, with one support, understanding it might test this support level like it did here, and a second support level to help you out to protect your stop loss that's just below that price level, going after near double potential profit compared to risk. So we've got some trade ideas here that could make sense in different directions based on your interpretation of the fundamental news, along with the technical setup that's on the chart. Okay, and so again, if we want to look at our open trades, they're running here. It looks like that US 30 is still trying to climb. We'll see what happens with that. That was a short stop loss on that. We could get nicked before any potential further dropping, but we'll see. Now, another option, if you were doing the gold move, and let's say you think gold should go up, but boy, you think it could pull down first, or vice versa. You think it should go down, but you think it might go up first. Whatever the case may be, our FX pairings, gold and silver, all have AvaProtect available for part of your risk management. So if you say, wow, there's a lot of volatility, it easily could go one way before it goes the other. And let's say you think gold should go up towards the all-time high, but you're afraid it could spike down before it goes up, then you can simply put AvaProtect. If I do one lot trade and I want to protect for 1 day to get through all the volatility, okay, that costs me about $1,200. So if I wanted my 1% risk to be equal to the cost of the protection, so with 0.4 lots, I'm risking only what the protection costs for the day of protection. And I can let this ride out for a full day with no risk of hitting any type of stop loss, because I don't have to put a stop loss while I'm protected. And so this is another way to go about a trade like this, is to pay an upfront cost, but then you can be very patient with the trade, and you could even do a couple days protection for not much more cost. So now I have 2 days protection for only a couple hundred more in cost. So I could just lower my trade size a bit, and now I'm down around 1% cost in terms of the value of my balance. But I can wait this out 2 days to see if it'll go towards the all-time high. So what's my potential profit? If I put it up there at 29.40 or so, okay, my potential profit is double what the cost of the protection is, okay? And so this is a type of setup that you could do to have a different type of risk management as well as you go after a trade. And so since you're waiting 2 days on this type of move, you even could put your potential take profit up higher. Maybe you think this could push towards 3,000 an ounce, which many are predicting that it potentially could be gravitating towards. So maybe you go just before 3,000 an ounce, 29.90. So now I'm looking at 4 or 5 times the potential profit compared to what the protection costs me. And now I can wait a couple days as well on that. So going for near 2,500, 3,000 profit, spending a quarter or a fifth of that on protection. Another way to go about the same trade that I already did, basically, but with a different setup for risk management, okay? And you can do like I did and have 2 of the same trade almost. And actually, I take that back. The other buy was on crude oil, so we're in the same direction, but gold is protected with AvaProtect, and the crude oil is not. Okay, they're both trying to trend in that upward direction. We'll see. But then to diversify your risk management, as I was starting to allude to, we could do a gold trade with a stop loss as well. Okay, there's no problem doing that. If I want to have a stop loss with a gold move, then maybe I do a shorter term type move. And so our other trade, the other trade we did was a pending order. So that's why I was confused for a second. I was looking at the open trades, the pending orders over here. And so there's our other gold buy, and we have a different risk management with that, just waiting to open only if it breaks through the resistance, and then we have a stop loss instead of the protection for 2 days. So we don't need to take another gold trade. We have the diversified risk management, one with a stop loss if it opens, and the other more patient move with 2 days protection, both with a similar amount of risk, but with a different protection scheme. Okay, I don't see any questions popping up. And we could look at other markets around the world. You know, if we pull up the UK 100, other major indices, we don't see the same type of reaction as we saw in the US indices. Okay, you see an initial pullback. There certainly was. It pulled back here with that inflationary data coming out of the US, and it looked like it was going to sell off with the US markets, and then look, it's up to all-time highs already. Okay, the UK 100. So very bullish move out of the UK 100. We could do the same thing for the DAX. Okay, the German 40. What we're seeing is a similar mirrored movement as what we just saw in the UK 100. So the FTSE and the DAX both climbing strong. It looks like the same chart. It almost feels like we didn't switch charts, even though we are on the DAX now. We see the pullback with the inflationary data out of the US right here, and the rapid climb back up. So very interesting how the different markets reacted. Initially, all moving the same direction. After that, all-time highs for the DAX and the UK 100. And perhaps there are some sellers out of the US buying into the other global markets that don't have such a fear of inflation internally within their countries. All right, everybody, I think this is a good place to stop. Strong technical buy signals showing themselves right now in the DAX and the UK 100. Maybe some sell signals on the US markets. Good luck with any trading you do this evening and the rest of the week. Bye for now.